When I started trading, I thought Forex trading would make me rich really fast. And instead, I just kept losing money. And for a while, I thought maybe I just wasn't cut out for this. But then I realized something. Trading wasn't the problem. I was the problem. And once I made a few changes to how I trade, I went to earn over 6 figures in trading Forex. So in this video, I'm going to show you some tips and tricks that can get you from zero to hero. So the first thing is, guys, if you want to trade, there's a few things you need to understand. And I'm going to try and keep this simple and brief as possible. And this is like a personal message to you all. Trading is hard, but it can be easy. The only way it gets easy is once you have structure and clarity. Simple as that. And I know I'll repeat the same thing again and again and again because it works. So the first thing you need to ask yourself is, right, what are you finding difficult? So that might be is understanding charts. So let's head over to the charts. When it comes to trading or analyzing, there are various ways to analyze. You've got fundamental analysis, you've got technical analysis. So let's talk about technical analysis. So I'm just going to call it TA, a new workspace. A chart is basically, right, past data visually presented to us in a specific timely manner. Let me say that again. It's past data visually presented to us of what's happened in specific timely intervals. Let me explain. On this chart here, right, it's literally, let me just delete this, everything that's happened in monthly intervals. There we go, look, all the way to 2005, all the buyers and sellers in monthly intervals. And on the right-hand side here, you have various time frames. So if I go down to the weekly, I can see the same information, but in weekly intervals. And what you'll notice is that you'll have more bars because lower the timely interval, the more the bars. So let's make it very simple. If I'm on a daily time frame, how many hours in a day? You get 24 hours in a day, right? So you get 24 hours in a day, right? So let's say we look at Monday trading day. So Monday to Tuesday, okay, is 24 hours. So if I'm on a daily time frame, okay, I'm only going to get 1 bar a day. So market opens, it can go up, it can go down or close. And in 24 hours, right, close, open, high, low. In 24 hours, I'll get 1 bar. But if we break 24 hours down into different timely intervals, okay, in one daily bar, a 4-hour time frame will give me 6 bars. A 1-hour time frame will give me 24 bars. A 30-minute time frame will give me 48 bars. A 15-minute time frame will give me 96 bars. A 5-minute time frame will give me 288, and a 1-minute time frame will give me 1,444. Let me explain on the chart and what I'm showing you and why you need to understand this. So if I take this one chart and I go to a daily time frame, and now what I'm going to simply do is just put on a vertical line from this day to this day. So 1 bar represents a day. So today is the 28th. So that's the 28th. Now, if I go down to a 4-hour time frame, that's what happened yesterday. So that one daily bar now has more bars. See that, right? So every 4 hours, a bar is going to open and close. So the market's going to do whatever it's going to do. Every 4 hours, the market's going to open and close. So this bar obviously opened at 2 p.m. and it will close till 6 p.m. Now at 6 p.m., it will just open and go up and down and close. If it closes lower than the open, it's going to be red. If it closes higher than the open, it's going to be green. That's it. So once you know that this is all a chart is doing, you are more aware and more ahead than most people, because most people think the chart is doing something magical. It's just visual data. That's it. It's just visual data. So that's one of the things you need to understand and accept with. Now, as a technical analysis, your job is to interpretate this data. So let's say you're someone good with Excel, or, you know, just looks at past data like businesses or patterns or behavior or trends and influence, and you're able to speculate forward. That's the same thing in what you're doing with a chart. So the biggest thing I always say to most people is the key question you should ask yourself is what's worth trading this week or what's worth trading today? And how are you going to break that down? So for an example, I like to show most people is look for the week ahead. So one thing you can do here on this platform is you put a period separator on as a daily, and you put a period separator on for a weekly. So this will show me where the beginning of the week is and also each day. So in this part here, I know the beginning of the week is here. Then what tip I do here is I go back to the weekly chart, and then I put another line on the next week like that. And as I go back down to the day, as you can see now here, I have a week to analyze for. So now my job is here is where do I think euro dollar is going this week? What is the direction? And what should I be trading? Now, there are many, many ways to interpret this data. So one way you can begin is literally looking for reversal patterns. Now, why do I say reversal patterns or reversal structure? Because the trend is your friend. And if you need to analyze the current trend, then if you look at where the last reversal is, that will tell you what the current trend is, because the last reversal is where one trend ended and where the current one is. So if we were to look at euro dollar now, we can see lower low, lower high, higher low, higher high, higher low. So in this case here, just from a technical perspective, we've seen the market break structure and has now made a higher high, higher low, higher high. And at the current moment, it's now making a higher low. And the question is it going to make another higher high this week? There are many traders who will have many, many methods. But now if this is your decision based on your framework from identifying reversals and saying this could be a reversal to the upside, in the last video when we spoke about Fibonacci's, you could put a Fibonacci at this point just to help you identify where this pullback could end. And now we can see markets coming to that golden number of that 61.8. So the question is now, are we going to see buyers coming out for the rest of the week? So now that you're knowing how to, structure your week, and now you've got a decision, the next step I want you to do is to start mapping out your days. So you've got Monday, Tuesday, Wednesday, Thursday, Friday, and that's what a week looks like. So then as we go down in lower time frame, the question is what is our execution method? Now there are many, many execution methods. So the next thing I want you to understand is you don't need to trade every day. That's the biggest lesson I learned the hard way, is trying to trade every day. The more trading you do, the more you're risking your account. That doesn't mean you're going to be any more profitable. The key thing you need to understand is you need to have direction. So now that we've got direction, the question is how we're going to trade to the upside. Now, the most easiest way to begin is with a very, very simple trading strategy using EMAs. So in this case, we're going to go to the 1 hour time frame and we're going to add 2 EMAs. Now, once we add the 2 EMAs, one's going to be 20, one's going to be 50. So now that we're looking for buyers, okay, if 20 crosses above the 50, so in this case, we can see 20 below the 50. If market crosses 20 above the 50, then we start positioning ourselves for buy positions, where we would look to piggy bank off moves like this in the same direction. As we can see here, pull back to the 20 EMA and up. And we want to repeat that pattern this week if the market presents it. You can analyze all you want. You can read whatever you want. And you can have the most beautiful process in the world, but you don't get rewarded for how good your amazing process and analysis is. Yes, you do, but the only way you get rewarded is the result. Think about it. If your analysis is right and you make profit, everything's great. If your analysis is right and you didn't make profit, now that can be many reasons. Did you get in too early? Did you have a tight stop loss? What you have to remember is you might hear people say, oh, euro dollar is going to go up. Yeah, but when? No one knows when. I want you to accept that is if the market presents it. Because once the market presents it, you have to make sure you're there or you're organized to capture that moment depending on your trading strategy. Trading is no different to life. You have to be organized, you have to remove the distractions, and you have to put your attention where it needs to be. And that's why I always say is what's worth trading for the week ahead so you can make winning trades. So remember, losses are part of the game. But once you know what you want to trade, it's very easy on how to answer those two questions, when to trade it and how to trade it. But if you're struggling to stay consistent, I've put together a video you can watch to help stay on track. And it'll help you define your risk limits, track your trades, and stay emotionally grounded. Click here to watch that video.